So tell me your name and your job title.
My name's Annabel Brodie-Smith. I'm the Communications Director of the Association of Investment Companies.
Now, you're a great advocate for investment trusts. So what is it that makes investment trusts special?
Well, they have really great long-term performance. The average investment trust is up 176% over the last 10 years. They've also been around, they've been through difficult times. The first investment trust was established in 1868. So if you think about that, they've been through the world wars, they've been through more recent events like the financial crisis and the pandemic. And they've survived those times and thrived for their investors. They also have independent boards of directors who are there to look after shareholders' interests and act on behalf of shareholders and negotiate with management groups, perhaps negotiating on fees and cost reductions. They have really important income advantages, investment trusts, and that's really important to a lot of our investors who are looking for income. And they're companies, so you're allowed to, you have a say in, you can vote, you can attend AGMs, you can ask questions, you have a say in the future of your company, and that's very important.
Now, you invited three really interesting but very different income growth funds to your investment trust panel discussion at the Investor Summit today. Talk us through those three companies for us.
Sure, yeah. I really wanted to demonstrate the benefits of investment trusts for income investing. So I invited Sue Noffke, who's the manager of SchroderIncomeGrowthFund, and that invests in UK equities. So she's a UK equity income investment trust. And it was really interesting to talk to her because one of the big advantages of investment trusts when it comes to income investing is that they can smooth income. And that allows them to have very strong, long track records of increasing their dividends each year. And actually, Sue's Trust has got a 29-year track record of consecutively increasing its dividends. So that's a very important advantage, particularly for the income investment trust.
And what's our dividend currently?
It's at 4.5% currently. It's one of 20 investment trusts that are called Dividend Hero investment trusts, which are investment trusts which have increased their dividend every year for more than 20 years. And they can do this because they don't have to distribute all their income every year. They can retain up to 15% and keep it in their revenue reserve. And when times get tough, like the pandemic or the financial crisis, they can use those reserves to boost those dividends and maintain those increases.
And Invesco, bond fund?
Yeah, Invesco Income Bond Plus, which is Rhys Davies managers. And that is a very interesting investment trust. It's got a very high yield, 7.2%. And Rhys explained he uses gearing, that's borrowing to invest, and that is a benefit of the investment trust structure to help him, first of all, boost his income for that trust and enhance returns. And bonds are a very volatile market, and he uses that, he's got that liquidity, that cash ready to invest when a buying opportunity presents itself.
And you mentioned the benefits of being closed-end as well.
Absolutely, because he can invest in some of the less liquid, more unusual bonds that perhaps private investors or open-ended funds just couldn't access because he's got that long-term fixed pool of capital, which helps for long-term investing. And then we had David Bird of Octopus Renewables Infrastructure, and he invests in renewable energy. His yield is just under 9%, quite a yield there. But he, of course, the investment trust structure, because of the long-term approach to investing, because their managers don't have to sell their investments when their investors do. So they can hold on, take a long-term approach, manage their portfolio as they feel appropriate. And that's why it really works for hard-to-sell assets like renewable energy, so wind farms or solar parks. And he really stressed that benefit.
Now, you've been working in the industry for, 28 years, did you say?
28 years at the AIC, absolutely.
You've got an emotional attachment to investment trusts. Talk me through that emotional attachment.
I'm passionate about investment trusts. I make no excuses. I love them. I would say if you cut me in half, investment trusts are going to run out, not blood. I am passionate about them. I am an investor myself. I have a portfolio of around 20 investment trusts. I'm passionate about spreading the message, getting the message out there. I want people to understand about investment trusts. I want them to understand about investing. And I think investment trusts are a great way. It's a collective investment. You're getting a diversified portfolio investments in one company. It's a great way for people to start investing. And if you're like you and me, perhaps carry on for a long time too.
Discounts. Time to talk about discounts. Discounts to net asset value.
Sure.
Talk me through discounts.
Sure. Discounts, first of all, I'm going to explain what it is. So investment trusts trade at their share price on the stock exchange. We're all familiar with buying and selling shares. But you can also value their assets, so their underlying assets. You would divide them by the number of shares and you'd have the net asset value per share. So if the share price is higher than the underlying assets, you'd say that trust is trading on a premium. If it's lower than the underlying assets, you'd say that trust is trading on a discount. Currently, the investment trust sector is trading on around a 13% discount. That has actually come in. The highest discount was 19% at the end of October 2023. And this year, we have seen discounts beginning to come in. Now, I would say this, but I think discounts are an opportunity. We've done some research. If you buy investment trusts on a double-digit discount, the next 5-year returns are around 78%. If you buy investment trusts below double-digit discount, or below 10%, the returns are 54% for the next 5 years. Now, they're still good, but clearly that discount gives you a boost to your performance.
My final question, let me take you to activists. Now, I don't know whether to include Saba in there as an activist, or perhaps we take Saba as a separate entity. But activism, a force for good in the investment trust industry?
Well, activists have been around for a very long time. And, they are shareholders, so they need to, their views and thoughts need to be listened to and responded to because they're shareholders in our trust. I mean, Saba was a little bit different because their initial plan was to take over 7 trusts. They were going to get rid of the independent boards completely on these investment trusts, and their plan was to completely change the investment objective to an investment objective that went around investing in other investment trusts. And I think that is very different to normal activists who are looking to enhance value for shareholders, bring in discounts, which I think is very positive.
Annabel Brodie-Smith, sadly we're out of time. Thank you so much indeed for being a supporter of the Investor Summit. Thank you.
I've loved being here. Thank you so much.